So here we go, let's talk about Tesla's horrible Q1 earnings. Now, I think we all knew these earnings were going to be bad. It was just how bad they were going to be. And they were awful. They were terrible Q1 earnings, and we're going to look at how bad they were. But as you probably see, in pre-market, the stock is up over 11%. So how is the stock going up in pre-market when we've had such horrible earnings? Well, today I'll show you the reasons why. But before we do get on to Tesla, there was a couple of other earnings that did happen. Enphase reported earnings. The stock was actually down a lot lower than where it is at the moment. It was down nearly 10% in pre-market. A little bit of a recovery going on in Enphase, but wow. I mean, between Enphase and Tesla, they could have a competition on who had the worst earnings here. I mean, Enphase, if you look at here, there was a miss on the EPS by 0.04. Revenue declined by 63% year over year. I don't think I've ever seen a 15 billion, that size of a company before, missed by that much. That's a major amount. But yeah, missed by 14 million. Obviously, you know, you would probably expect it to be a little bit more than that, but a bit of it was priced in. The tough comps from Enphase have kind of been nearly done there now. Q2 was a little bit disappointing on the guidance once again, but it's getting a little bit better for Enphase, and a few people are holding on at the moment thinking the better days are going to be there for Enphase sometime soon. But wow, it's crazy looking at those numbers, and year to date down 13%. So yeah, on a positive note, Visa's up a little bit in pre-market, only by a couple of percentage, but once again, absolute solid earnings from Visa. They came in with a beat. They grew at 10% year over year, and beat by 180 million and 27 times forward earnings, which isn't bad for such a high quality business like Visa. Obviously, one that I own, it's done very well for me. I think I'm up 80% on Visa, and that's with a lot of averaging up as well. I think I must have been on the YouTube channel for like the last now 6, 7, 8 years. I've said that, you know, if you're investing in the stock market and you do an individual stock picking and you don't own Visa or MasterCard, what are you doing? Like, one of them two has to be in your portfolio. For me, I've always gone with Visa over MasterCard, but even if you own MasterCard, they're both fantastic businesses that are going to be very successful for many years. And obviously I've done really well through Visa, but even if you had MasterCard over the last couple of years, you've done really well. So yeah, it's one of those that I don't really talk about Visa that much. I probably should talk about it a little bit more than what I do. But it's one of those that, you know, I've been banging the drum for having Visa or MasterCard in your portfolio for like the last 7 or 8 years. And it's one of those that you never get the credit for, but as soon as something went wrong, you know, it's there in the comment section. So yeah, a stock that I own up another good amount today, and yeah, Visa absolutely smashing it as always. But let's go to Tesla stock. So Tesla having a good pre-market, even though the earnings were horrible. And what made me laugh is all the people that tried to jump out and be like, oh, look, I told you how good it was going to be. You know, all these kind of people have been promoting Tesla since it was like $300, $400, going, yeah, don't worry, just buy it at $300, just buy it at $400. Down massively, and they were all like, yeah, I told you Visa was going to go, I told you Tesla was going to go up. It's absolutely bonkers the amount of people that tried to make it like they knew that was going to happen. And, you know, I saw this the other day from like Financial Education, and he was on about, he does this at the intro of every video. He puts like a slide up and he's like, oh, look at this, what I'm up on. It's either Tesla or Elf. And today he decided to mix it up a little bit and go, oh, I shorted the market and look how much I'm up from shorting the market. And he was like, oh, okay, but like you've been trying to do this tactic for the last 2 years, and last time I saw you were trying to do a short on the Dow, and since you did the short on the Dow, like the Dow's up 16+%, and that was on triple leverage, so that's probably like down over 50+% on that one. But no mention of that one. Sell that quietly out in the background. That one didn't work out. I won't show that one up on an opening slide. And there's so many YouTubers that, you know, do this. I saw the other day, Sasha, he was trying to go boast about Tesla earnings because they were up. Like, this guy's been promoting it since $300, $400, and he's like, oh, well, the stock's up now, so I'm right. It's crazy. I mean, Tom Nash, he was like, oh, I was telling you that to buy Tesla, we're going to go up after earnings. And same again, this guy must be down like 40 or 50% on the position. And just because it's up a couple of 10%, they're all going, oh, look how good it is. And let's be honest, I mean, if I was to do that, like if I was to go with S4 Capital, oh look, S4 Capital's up 24%, I'm a genius. I'm not going to do it because overall the big picture, I'm down massively. I'm not going to start showing off about it. It was crazy about people that were trying to make themselves look geniuses. I guess this is the whole YouTube scene, and they got lucky because the earnings were atrocious. The stock is not up because of earnings. It got up because of Elon Musk, which we'll talk about. But we'll have a look at the earnings overall anyway. So EPS was a big miss, missed by 0.05. This is after analysts have been downgrading that EPS number by massive amounts in the last month, and they still missed it, which was terrible. Revenue declined by 8.5%. We were expecting the revenue to be like just about break even, but a decline by 8.5%, missed by 950 million, nearly 1 billion. That's a major amount, big impact here from Tesla. And the worst thing is actually when you start digging even more into the financials, it just gets worse. Overall, car business down 13%. Energy generation, which has been showing positive signs a little bit, even that was starting to slow down, 7%. Service and revenue growth, that's slowing down 25% now. Gross profit down 18%. Operating expenses up 37%. So you're having all these metrics go down and then you're spending more money. That's awful. Income of operations down another 56%. Operating margin down 592 basis points. EBITDA down 21%. It's horrible. Free cash flow down 674%. Negative free cash flow. That's the worst we've ever seen. The cash flow point of view, atrocious numbers. Absolutely awful numbers. And the worst thing for Tesla now is that you're looking at the profit's declining that much, and it's declining even more than what's expected. The forward P on Tesla now is actually 51 times earnings. This is why you look at Tesla and you think, you know what? Maybe now it's creeping towards the low 30s, maybe you go buy it. But realistically, this is when you forward times earnings of 50 plus, and it's even higher now because they're missing these EPS numbers. I thought I'd buy it $150, but these numbers are getting so far worse than what I was expecting. I don't even know I can buy it $150. I don't know if I need to have it a little bit lower to justify the risk that is here with Tesla. And overall, I guess people are saying, like, why is the stock up? How is the stock up on such horrible numbers? Well, once again, Elon Musk, he comes to the rescue of Tesla shareholders. He can talk a really good game. And what he tried to do, or should I say successfully did, is he said, we are updated our future vehicle line to accelerate the launch of new models ahead of our previously communicated start production in the second half of 2025. So he once again smokes a mirror, distracted shareholders from the numbers, and threw something out there to kind of go, oh, look at this, and forget about what's happening. And that's what he's done. He said they're going to be bringing a cheaper model out earlier than expected. Now, obviously, the stock market, the cult followers, they took that as, oh, that's going to be the saviour, because people aren't going to buy these expensive Model 3s, not buying these Model Ys, these Model Xs anymore, because they're too much. Higher interest rate environment, all these inflationary pressures, people don't have that much money to spend. So to track those people in, they've had to lower the share price, the price on the cars. There was probably people that were still willing to pay those higher prices, but there was a lot of people that weren't, so they had to drop it down. So now with the cheaper model, obviously that will hopefully be the saviour, because people will pay the cheaper model, and those that want to pay their high prices for those higher end vehicles will go deal with that, and they can charge the most money, and hopefully that makes up for the margin impact. And also there's been the competition as well. There's competition out there with cheaper models as well, that they haven't filled the gap in. And this has been Tesla's issues for the last 2 years, is that they've just made so many bad decisions. They brought the Semi out, which you never hear about that anymore. The Cybertruck, which is horrible looking, should have been more of a neutral Model 3, Model Y looking thing that everyone would have loved. If you look at some of the prototypes that are out there, some of them were really good looking. Would have been easily adapted into Europe. Obviously they can't sell that in Europe because of health and safety regulations. The Cybertruck's been a mess. And this cheaper model should have been out, probably a year ago. And they probably might not be in the mess that they're currently in. And, Elon's done his best, which he's really good at, by the way. I'm not saying this is a bad thing, but he protects the share price, and he does it well. I don't know how people sometimes fall for some of the stuff he says, with robo-taxis and full self-driving and some of the Cybertruck that he talks about, and, 50% revenue growth per year. Obviously nowhere near that at the moment, declining growth. And he's protected the share price, really well, but there's been poor decisions, and that's really started to catch up with the financials at the moment, and now they're playing catch up a little bit. And one of the things is to try and bring out this this smaller, cheaper Model 2 out at the moment, which they should have done years ago, and maybe they're not in this mess right now. The problem is that by the time they do, let's say they're going to bring this out by 2025. I mean, that's only start of 2025. That's only a year away. I don't think they're going to be able to ramp it up that much by that time frame. And the problem is, by that time frame, we might be out of the mess that we're in. They might start bringing the interest rates down, and there's less need for the cheaper model now. So yeah, I mean, overall, Elon did a good job of protecting the share price through the earnings and trying to distract and say, look, we're going to resolve things because this is going to come out. But the numbers point of view were awful, and probably the share price should have reflected the numbers that they've just done. I guess the other thing as well is that we are, really negative sentiment at the moment. I said this for a while, is that when people are this bearish on Tesla, it's normally near the bottom. When you start seeing all these people that are being bullish on Tesla, how even they've turned on the stock, that's probably a sign that we are towards near the bottom. And that's the thing that's been pushing me to go buy, is that when you look at the sentiment out there, it's so negative. And it's like, well, if this is the share price with this sentiment, is it actually going to go any lower? And that's one thing that I've actually been thinking about, that could this actually be the bottom? Is it actually never going to reach that kind of $120, $110? Because if it is, I feel like this would be the time frame, and it's not doing. So that's also something that's kind of playing on there in the background. But from a number point of view, it was financially terrible. And fair play to Elon, because he saved the stock yesterday. He saved it big time, because it should have gone lower. But he's a good job. He's a good seller. He keeps that share price high. He keeps throwing all the distractions. When there's bad delivery numbers, oh, don't worry, cyber taxes are coming. He does a really good job of protecting the share price, and that's not me having to dig at him. Sometimes people use it as a dig. I think if you've got something like that can protect your share price like that, it's good. It's good. But however, there has been bad management decisions made with products in the last 2 years, and that's hurt them as well as the high interest rate environment that will disappear one day, and we'll see what numbers they will do. And that's the big thing, is that when you're paying up whatever it is for this company, 51 times forward earnings, I just don't know what Tesla are going to do. In 2025, 2026, 2027, I just don't know what numbers they're going to do. And I see this a lot from the bulls, like, oh, it'll be okay in the long term. But it's like, well, what are they going to do in the long term? Can you tell me what the growth's going to be? Because I have no idea. What are the profit margins going to be? Especially with this lower, Model 2. Tesla are never going to be to the profit margins they used to be at in, 2022. Because it's a lower price product. You're not going to make as much money on it. So I struggle to find out what Tesla I should value Tesla at, because I have no idea what the profitability and the revenue growth is going to be in the next 5 years. And that's why I always want a higher risk to reward at the moment before buying. If you could tell me that Tesla was going to grow 20+% in the next 5 years, and the profit margins was towards like 20+%, or what, even less than that, I'd easily buy the shares. But I don't know. I have no idea what they're gonna stop at here. So yeah, that's the view on Tesla anyway. Terrible numbers, but credit to Elon for saving the share price. Anyway, hope you enjoyed the video. See you in a bit.